Reaction channel. Holy smokes, this ain't no joke, as we got a lot to get into in this video here today, okay? Right off the bat, Adobe stock down about 5 percentage points here today. We're going to speak at the beginning of this video what's going on with Adobe, what's my plan with this stock. We'll get into all those sorts of things right at the top of this video. From there, I want to react to this video. The bull trend is underway. Brian Beltsky, looking forward to reacting to that one. Josh Brown's best stocks in the market, looking forward to hearing Josh Brown's opinion, kind of sharing my perspective on that. There's bias for the market to correct over the short term, says Jason Hunter of JP Morgan. Looking forward to reacting to that one. Looking forward to reacting to this one. Equity markets are looking vulnerable, says this gentleman. And then we're going to talk about AMD stock here for a moment. I posted this on X here today. It's now by far the second biggest position in the public count. Talk about my exit strategy in regards to AMD. What's the plan there over time? Then additionally, I wanted to react to this, but there was issues with the video, and so now we got it up here. Looking forward to reacting to this newest interview of Lisa Su talking about some very important things regarding AMD. So my gosh, folks, a lot to get into. Adobe, AMD, a bunch of other stocks, market reaction. Man, busy times. I appreciate y'all for joining me. One thing only I need from you. Smash that like button. That's it, man. I hope you can do that for me. I need at least 5,000 people to hit the like button. Okay, I appreciate y'all for doing that. And additionally, if you want to subscribe to the channel, you can certainly subscribe. We are now at we're getting close to 100,000 subscribers. That I do know. Okay, already Adobe, this stock down about 5% here today. By the way, a lot of stocks were down, to be fair, here today. I mean, only 3 stocks I had that were green today are Celsius, AMD, and Estee Lauder EL. Okay. But in regards to Adobe, what's going on here? Well, a lot of news came out in the last 24 hours. One, Wall Street. So, Citigroup came out, they adjusted their Adobe price target to $450 from $465. That came out in the last 24 hours. Then we had Citigroup, they adjusted from $450 to $465 here, right? Yeah, big deal. Like, you know, analysts adjusting price targets, like no big deal, right? This one, Adobe is maintained at neutral by Baird. This one, they raise their price target to 425 from 410. Big whoopee, right? But analysts are always making those moves. You know, I thought the big news that happened today, and this is actually great news, is Adobe launched a standalone Firefly mobile app for iOS and Android. I thought this is a huge development. I think this is great news. This Firefly app has tremendous opportunity over the coming years. And so this was a big step in the right direction, launching for iOS and Android. And so, yeah, you know, this is ability to, you know, basically type in, I want a video to do. I want an image to be blah, 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 right? And it'll basically send you that out, which is going to be very, very helpful to folks that are in any sort of marketing realm. Also very helpful to creators, right? In the creator economy. So huge, you know, ramifications on what this means for Adobe's business model over the long term here, right? So what I look at is a day like today, it's a buy the dip opportunity, right? We have Adobe here, great SaaS related company, trading at a forward P of 20 with a 2-year forward P under 17 on this one, with strong revenue growth. I mean, at the end of the day, guys, like, this is just an easy money buy. It's an easy money buy, and I think it's going to remain an easy money buy for a while, to be honest, because it's an easy money buy even with the stock market near all-time highs right now. So let's say hypothetically the market gets hit at some point later this summer, or let's say it gets hit this fall. Like, Adobe's going to, in my opinion, remain a great buy for this entire year. So that's an important thing to understand. So I look at Adobe and I just want to keep buying the stock, especially any shares I can get under 450 and especially under 400. Like, the further it is under 400. But you look at this company, I mean, it's if you were to have like a book written, right, on what a great investment is, I mean, Adobe would come to mind. I mean, look at the revenue trend for this company over time and where it's expected to trend, right? Look at the gross margin consistency here, right? Look at the net margin consistency. Look at the earnings per share and what's expected to happen to the earnings per share over this coming quarters, right? Look at the free cash flow. Look at the operating cash flow. Look at the operating income. I mean, this is what you look at. And by the way, as far as shareholder equity, they've been doing massive share buybacks. So they have been spending some cash on that recently, which is certainly going to massively help out their earnings per share here, right? Skyrocket. This is what you would look at to understand a perfect business model, just to be quite frank. Recurring revenue stream. It's honestly, regardless of what happens, in Iran, between Iran and Israel, regardless of what happens with inflation, deflation, regardless of what the Fed does, Adobe's going to put up their numbers quarter in and quarter out. Great business model, great income statement, great balance sheet at this company. It's just a very easy stock tone. A very easy stock tone. And so I will remain a buyer of Adobe. Okay, let's do some market talk, and then we'll get into AMD.
Percent off the April low is NVIDIA. The other Mag 7 stocks aren't quite that big, but they're big. Meta 37.5% off the April low.
Cheers.
Microsoft 35. Amazon, Alphabet are 27 and 22 respectively. You know, Apple's been lackluster relative to a lot of other names in this.
Hey, question for you guys. Question for you. From the mega caps, which of these stocks is your favorite right now? NVIDIA, Meta, Microsoft, Amazon, Google McDougal, or Apple? Let me know in the comments section. I'm really interested to hear from you guys on which of those is your favorite right now. And I'm sure other people will enjoy reading through that as well. If you want to know my personal favorite right now, if I had to buy a stock today and I didn't have any money invested into any of these stocks, you know what it would be? Meta. Meta. No question. Now, I'm not buying Meta today. Why is that? Well, I already have a lot of money invested in Meta. The public account alone has, $1.1 million invested in a Meta. So, yeah, like that's a significant portion, right? And so, I'm a little more partial to buying Amazon or Google McDougal right now over Meta. But if I didn't have anything invested, Meta's the best buy of everything in my personal opinion.
Group, but even that stock's up 15% from the April low. Are you poised to believe Roth Capital and say there's plenty of support that the bull trend is indeed underway?
Well, I think the bull trend is underway. We're very lucky to remain bullish through all of this. But I would say that there seems to us on a very short-term basis, you're going to be surprised at this, I think there's a lot of bulls out there. And one of the guideposts that we've been looking for is kind of more company guidance going forward, and guidance is falling off a map still. So we're a little bit worried near term on that. Do I think stocks are higher at year end? Yes. Do I think they're significantly higher a year from now? Yeah. But I think even within the Mag 7, I think you have to be even more stock picking. So like we would be adding to Apple here because we think Apple's going to have a big catch up trade. And we've maintained our overweight stance in Microsoft and Amazon. So that's what's helped our portfolios April, May, June to significantly outperform.
Shan, it's time to just lean into this market, and institutional investors and hedge fund managers, and I like what Adam Parker delivers when he shows up because he.
Oh, we're talking about Adam Parker. Listen, man, this is just hold on. I'll go off in a second, but this is just something ridiculous.
Meets with and he has dinners with and these idea dinners and whatnot, and there was a lot of pessimism among the professional crowd. Now, if you look at the fund manager survey and you think about where the narrative has come to, is it time to just be less fearful and cautious and just lean in with stocks 2% from a new high?
Well, I think the pessimism was likely warranted because it felt like the uncertainty that was being created was really outside of the control of any of the portfolio managers of which you speak. I think the other thing that's happening, Scott, is that we have a tax bill that's weaving its way through Congress that has some very specific and explicit and potentially transformational changes in terms of at least tax over the next 4 years or so for businesses. And so if you're looking at, and I would say it's somewhat tangential even to the AI trade, if you look at being able to expense capital expenditure on software over the course of the next 4 years, 100% in the year of your purchase, wow, that actually could create some of this monetization of the AI trade outside of the Mag 7. I think the other thing that's happened is that, we have seen tariffs and we've seen that expected tariff rate continue to come down week over week over week over week. And as that continues, what we're getting is, to Brian's point, we're going to start to get some real guidance in terms of, okay, we think the tariff rate's going to be 12% or 13% or 11%, maybe 10%. But now I can start to price that in. And so I think that this earnings season is going to be very critical in terms of getting the guidance in the hands of investors, and that could allow professional investors who are more discerning around the fundamentals. I think that's why they're getting more optimistic.
Well, the big part of the story is that...
So here's the issue, right? This really bothers me. This question of, is the bull trend underway, right? Here's the deal. The Nasdaq's up almost 90%, almost 90% from fall 2022, right? We've been in a massive multi-year bull market, If you want to look at where we were at, back in that April lows versus where the market's at now, the Nasdaq, right? We're up about 27% from those lows, almost 28%. What do you call that? We're in a bull market right now, right? At some point, the bull market will be broken and we'll get a 6 to 18 month downtrend, right? Like a real significant downtrend. Now, when is that? Is that this year? Is that next year? Is it the year after? That's the good question. But there's no doubt, like, we've been in a multi-year bull trend since 2022, right? And prior to that, we were in kind of like a, we can call it a little over a year-long bull cycle, because the previous bull cycle was broken in 2020, right? Then from those lows in 2020, we had a nice bull market for about a year and a half. Then we went into the 2022, ending of that really bull run. And then if you go back to prior to that, honestly, we kind of broke the bull run at the end of 2018. Then we had a little bull run after that into Rona, right? And then that bull trend broke. And before 2018, honestly, we had a bull run all the way from 2009 all the way to that fall 2018 when that bull trend was broken, in my opinion. So, like, we're in a massive bull trend. It's eventually going to end, right? It's eventually going to end, and it'll be painful in the short term, and that is what it is. But for buyers, it's going to be a great day when that happens, right? Whether that's a little later on this year, or whether that's next year, or the year after, or the year after. The issue is you wait too long, right? Like a lot of these fund managers are. Now they need the stock market to crash just to get back to where it was. This is why you don't play this game, right? That the fund managers try to play of, like, not buying when stocks are significantly low, right? Because you look, the Nasdaq was at 10,000 at the lows, right? Roughly in 2022. And some fund managers decided to not buy, right? How do I know that? Well, there's data showing that. But additionally, how do you think all those stocks went down 50, 60, 70, 80%? Fund managers kept selling Meta relentlessly, kept selling Nvidia relentlessly, kept selling Netflix relentlessly, Shopify, go through the long list of them, right? All the stocks that they're happy to buy today, they were selling them. If you were not buying in 2022, right, you need the market to crash almost 50% just to get back to 2022 pricing. 50% crash. It's insane. That's insane. Like, ridiculous. And then think about all the money you could have made along this run. You could have sold stocks and made big, huge profits. And now you're banking on a 50% crash. Crazy, man, crazy. And that's why you got to be very, very careful. And that's why at the end of the day, when you get, let me make this very, very crystal clear for everybody watching us right now. If you want to make a lot of money in this game, listen. When you get those opportunities where the market has a major correction or a crash, you buy every freaking share. I know it's ugly. I know there's a million things to not be happy about at that particular time. It was like that in 2022. It was like that earlier this year. It was like that in 2018. It was like that in 2020. It was like that. I go through the whole list of years, right? At the end of the day, when you're going through a major correction or crash in the market, you buy every share in sight. You buy every share in sight. But specifically, great companies that have long-term growth trajectories. Those ones will do you much better.
No one truly knows how the Trump tariffs are going to fully play out. Will deportations that we've seen hurt the economy? There's a story today new from the Washington Post that says Trump officials reverse guidance, exempting farms, hotels from immigration raids. ICE agents have been told to continue conducting enforcement operations at ag businesses, despite concerns about negative effects on the food industry. I wonder if we morph our concerns from what was the trade war and tariffs to just messing up a bunch of industries because you have this policy in place and you don't appear to want to waver from it at all.
Right. We're not out of the woods on tariffs at all, but we are getting more certainty. We think that, it looks like Trump wants to get stuff done quicker than expected, but it's probably going to take longer than expected. But in the face of all that, I'm just so amazed that the GDP numbers at 3.8% are 3.8%.
Yeah.
And I know it's directional, and I know we have to average average first quarter and second quarter, that's 2.5% GDP growth. And by the way, I don't talk about it enough. I know you guys do, but the weak dollar, that's really good for U.S. multinational companies. So that's going to be another tailwind for earnings. And I just care about earnings.
There are two sides to the. I feel like, first of all, I feel like you didn't answer my question, so I'm going to come back to you on that because you didn't answer my question. So let me just go to the dollar since you went there. It is the largest underweight right now in 20 years. The dollar's lost 10% of its value since President Trump took office.
Right.
Now, you can go one of two ways on that. You can say, well, that's good for multinationals like you did. Or you could look at it and say, well, there's a direct line of evidence to a lackluster belief in the American exceptionalism trade. You guys are nodding your head like
yeah, I think there's two.
Wait a second. Let me answer your question on the whole messing up industries. In the face of this happening, we aren't messing up industries.
Well, how do you know that?
Because earnings just grew 12% last quarter.
Well,
in the face of all of that.
Did you get a bunch of farm earnings reports and hotel
Did you see
and
Deere?
restaurant
Did you see
earnings
Caterpillar?
reports?
Did you see Chipotle? Did you see? I mean, there's a lot. There's a lot of companies that have done it the best that they can. Either they are giving very conservative guidance.
Him and her always end up getting into it a lot, I noticed.
Sometimes they're not giving guidance. A lot of my companies did, and I was shocked that they just reiterated. How about the whole financial services industry? Every single bank reiterated guidance. Not one of them lowered, and that is really quite impressive because they're at the forefront of what's going on the tariff side.
Now, the dollar thing is a legit part of the story. Falling dollar may be good for multinationals because it traditionally has been, but if you think it's falling for the wrong reason, then you sit back and you take a look at the whole big picture of where we are.
You know, in our view, it was at first falling for the wrong reason with respect to international investors losing faith in the United States. That's clearly why you had Europe massively outperform. And why industrials, by the way, are the most eclectic sector in the U.S. market, have also been one of the best performing sectors, and obviously there's a big international component of that. However, one could say that the majority of the dollar's weakness is beginning to slow down. I mean, the trend is beginning to change pretty dramatically.
I mean, 10% is a big move.
Well, if you look from where it was, but now we're starting to see solidification. Also in the Global Fund Manager Survey, we had the good fortune of being in France and in England to see our great institutional accounts in April, and a lot of those clients have massively overweight Europe, Scott.
Well, you know what they said, since you went back to the survey? That international stocks are going to be the best performing asset over the next 5 years.
Yeah, they're talking, first of all, they're talking their book, number one. Number two, that they don't have the fundamental attributes to be able to match what's gone on in terms of stock price. They don't have the economic growth. They don't have the stock or earnings growth. And so many of the people that we talk to are actually becoming, dare I say, reluctant buyers of U.S. stocks again, Scott, because they have to
You can't criticize people for talking their book. You talk your book all the time. So does every single person who comes on the network. Otherwise, do you have any belief in your book?
I don't know.
Like, what are you going to come on and contradict your book?
I talk my process and my discipline in terms of
but you talk
publishing.
about why you think your view and the stocks you have are going to work.
When you're talking,
is that talking your book?
When you're talking to an institutional client that has been, for all intents and purposes, a reluctant buyer of U.S. stocks for 20 years, and they finally were right on Europe for the first time in 15 years, Scott, of course they're taking a victory lap. So yeah, they're going to continue to be on with that because they do have an overall hatred for the United States and all. And yeah, I would call that talking their book and being emotional about it.
Mean reversion in the dollar. Scott, everybody came into this year saying the dollar was overvalued. Nobody said that. Was even before the inauguration. It was before the tariffs. It's before this tax bill and the deficit. So, to talk about the fact that all of a sudden just what's happened politically in the last 3 months is why people are rotating away from the dollar. I think that's somewhat short-sighted. But the point is that this crisis in terms of fiscal sustainability has been building for some time. Now, to Brian's point, people latched on to the German fiscal stimulus as rationale to get excited about Europe.
Yep.
And there's likely some legs to that. There's a tail to that. There's a transmission to the rest of the continent. But I think, in terms of, it's not a binary decision to move out of the dollar just because of what's happening in politics.
The ECB
there's other alternatives.
So, in regards to the whole immigration situation and how that affects companies, right? Here's the deal. for most of big companies, it's irrelevant to them, right? Like Meta doesn't have a massive amount of illegal folks hired at Meta, right? And you go down the whole list of those big companies because they do massive background checks before you even get hired and all those sorts of things, right? You have to show all this paperwork. It's more small business, local businesses, things like that can get hit worse, right? More mom and pop type businesses, right? It's a local car wash that could get hit, right? It's a cleaning company, like stuff like that, small restaurants. Anything like that, farms, like you mentioned, right? You're not going to really see those show up in corporate earnings, so it's not really affecting the big dog companies. But it will affect smaller local businesses, right? Which then could end up affecting bigger companies. But just keep that in mind in regards to that, right? It's not like the Apple Store has massive amounts of illegals all hired, working at the Apple Store. Now they got to shut down the Apple Store because everybody was illegal working in there. Like, no. It's the smaller businesses that are really hit hard when it comes to that, right? Josh's best stocks in the market.
I think obviously the thing that we have to talk about is the defense sector. We've got a bunch of these names on the best stocks list. We've been talking about them. And last week, of course, they broke out on the heels of the conflagration in the Middle East getting hotter. We talked about Axon and we talked about RTX on May 19th. From that date, RTX is up about 8.5%. Axon's up 5%. Both stocks were breakouts in progress, and they have broken out. So that's the update I wanted to give people. In the column at CNBC Pro, I'm talking about moving up stops and what to do when you've got a winning trade on your hands, depending on whether you're a trader or you're a little bit of a longer-term investor. But those rallies are significantly greater than the Qs, which are up 2% in that time. SPY is up about 1%. I think it's important to just acknowledge the fact that the market sniffs these things out before they happen in many cases.
True.
The median return, Judge, for an aerospace and defense sector stock year to date is 17%. The median year-to-date return for every other stock in the S&P 500 is just 0.7%, not even 1%. Every single aerospace and defense stock is above its 50-day moving average, and only 2 of them are below their 200-day, meaning not yet rallying. Those would be TXT and LMT, Lockheed. So when you're looking for, where is the strength in the market, what stocks am I supposed to be in, this is a really smart way, I think, to just say, okay, I'm not going to be ahead of the curve on everything. What is the market already figuring out? These are two examples of many where the market has already figured out things are heating up in some of these conflicts, orders are coming in, and these stocks are going to work. And lo and behold, something happens, a catalyst, you get that breakout, and now you're playing with the house's money.
Belsky, you own Lockheed, you own Northrop Grumman and Honeywell, so you believe in the aerospace and defense trade?
We do. We look at these as the OG defense contractors. Plus, we're aligned obviously with Josh, but I think you also have to think about cybersecurity along with defense contractors. But these companies are amazing because of the cash flow and the dividends and the consistent earnings, the guaranteed revenue from the U.S. government. So that's why we've owned them for a long time.
GE Aerospace for you?
Yeah, but it's small defense. It's only about 25% of total revenue. But they delayed their analyst day this week because of the Air India crash tragedy. I do expect them to have another one soon in the next month or two. And I think they're going to increase their EBIT growth rate from $10 billion to $13 billion by 2028. Free cash flow and mid-20s margins as well. So I still want to be long this stock, but I have to say I do prefer Boeing. It's cheaper and it's more of a turnaround story. GE, it's already turned itself around.
Yeah, in terms of me, do I like those defense contractor type companies, right? Lockheed Martin, if you want to talk about GE Aerospace and the whole bunch of them. Personally, no, I don't like them. I just don't feel super comfortable a lot of times investing in those type of companies, right? Because at the end of the day, let's just be honest, those companies really prosper during war times, during conflicts, massive more spending. And so I just don't love the optics of investing in those type of companies. It's not doesn't feel good to root for them. You know what I mean? It doesn't feel good to root for them. There's a lot of companies out there you can root for and feel good, right? Meta, I feel great rooting for Meta, right? great. Small businesses, mid-sized businesses, large businesses want to spend more and more on ads because they're making money. Good. Like, I feel comfortable. People want to order more stuff on Amazon and use AWS more. Like, I can root for that. Like, I just don't feel super comfortable rooting for war, right? And that's when you make the most money, when people are scared of war, when you're going to war, because, obviously a lot of stuff flies around, blows up, blah, 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 right? Alrighty, next one up here, Jason Hunter, JP Morgan. There's bias for the market to correct over the short term. This should be interesting.
Jason Hunter. Jason, good to have you. Thanks for coming in.
Thanks for having me again, Mike.
An impressive rally since early April by really any measure, the persistence of it, the breadth of it, the magnitude of it. But it's slowed down. I was making this point, like in the last several weeks even, it's just kind of had this sort of like smaller steps, narrower ranges. What does that tell you, and how do you think it breaks from here?
So as a technician, when you see that type of pattern develop, the loss in momentum, and even over the last couple of weeks, the breadth has narrowed. Stocks above their averages, stocks at 52-week highs, that's contracted. You look around the globe, a number of global indices, both in DM and EM, have stalled in range since mid-May. That suggests rally exhaustion. And even we look for very specific patterns. Momentum divergence is one we're very focused on. That tells you there's a bias for the market to correct over the short term. We don't think it's going to be major. We think we could see a bit of backing and filling, maybe down to 5,800, 5,700s, given that setup. But that should be well supported there because the seasonals during the summer are still quite positive.
So that's like, call it a 5% pullback from the recent highs you think is in the cards. Is there a way to try to reverse engineer why the market has been, I guess, as resilient as it has? I was even pointing out, we had that little break on Friday and, it didn't even get to its 20-day average, let's say, for the S&P 500.
That's right, yeah. And when you look at the technical setup, really for the last 2 weeks, it's been, as a chart watcher, you're like, okay, this is pretty negative. I should expect negative price action. You think about the headlines over the last 2 days, and you're like, why aren't we getting it? I think it comes down to positioning. I don't think the speculative community is overly long here. The trend-following CTA community is probably somewhat long, but not over their skis. And I think for the retail community, that's really helped power this rally. I don't think they'll try and sell ahead of a correction. You'll have to twist their arm, so it really will have to come from the specs first. Before that, I think that's part of the reason why it just hasn't sold off yet.
Yeah, retail traders, I guess, it's kind of like they're maybe slow to sell their losers, put it that way, as opposed to having a more rigid sell discipline. The Treasury market, it gets people very excited when yields have gone up to the upper end of their recent range, but I guess you look over 2 years, they haven't really gone anywhere. So what's that market telling you right now?
So what's most interesting for me looking at the Treasury market, the front end has had the Fed priced for 3-4 eases for a while.
So I want to talk about something very important they talked about there. Retail investors slow to sell their losers. Here's the deal. You got to understand when it comes to retail investors, people like myself, maybe a lot of you guys watching this video right now, right? A lot of us are not retail traders. We're retail investors. We're buying stocks to hold them hopefully for years to go in the future, right? So a lot of times if we have a losing stock, we're likely buying more and more shares of that stock. A good example in the public account is Nike. Nike's a stock I'm down on, right? Nike, I love the stock right now. So am I going to go sell Nike? No. If anything, I want to buy more shares of Nike. I'm in no rush to sell that stock at all. I would be happy if I sold that stock 5-10 years from now. I don't want to sell it now. I don't want to sell it next year. I don't want to sell it in 2027. That's a stock I'm buying and buying and buying every share in sight right now because I'm going to feel very comfortable holding that for several economic cycles likely. Nike is a type of company and brand that you can hold for decades or generations, right? And so I look at a time period like now and I'm like, yeah, I'm down on that stock. I'm happy to buy more shares, right? And so that's the other important part, I think, that gets forgotten about when we talk about retail traders, right?
Well, it's pretty much range bound. For this year, though, the term premium, the weakness at the long end, the curve steepening, the narrative around that, both the loss of U.S. exceptionalism and the questioning around fiscal discipline. What's interesting is the bonds actually carved out a decent multi-week yield top pattern as it's retested the cycle cheap, let's call it 415 to 418. And I think if you were to break through, 515 to 518. If you were to break through 480, I think you could see a decent...
On the 30?
On the 30-year bond. I think you could see a decent impulse to lower yields as far as 460, 455, given the way that the chart's set up. And I think that's very much an out of consensus type setup. And when you think about the sentiment and narrative where it is now and the chart forming that as a technician, that's what gets me excited, because it's very much against the grain in terms of what the narrative is out there.
Sure. You mentioned that on the equity side, things have kind of narrowed out, as the rally has matured. What would you think tactically in terms of parts of the market that look better or worse positioned, that maybe they would do worse in this pullback you're expecting, or that you would expect to kind of outperform?
Well, it's ahead of the headlines this week. Yeah. It was the deep cyclicals, including materials, energy. And when you looked at the commodity markets, they seemed very much well contained below their breakdown levels that were, that occurred in March and April around the tariff headlines. And that very much looked like, so that's still the case with materials. In fact, the base metals look like they are exhausted, and some are already rolling over. Energy, a whole different story, because crude squeezed through its resistance in the 60s and got to 80, and we'll see where it gets before this current crisis abates. But I still think probably the more cyclical side of the market, small caps are also well contained below their breakdown zone. They're probably the more vulnerable. It looks like people are crowding back into like the quality, the Mag 7, the big AI tech name. That seems like that'll be the one that holds up well if the market sets.
Yeah, maybe.
Okay, nothing there to add for that one. Equity markets are looking vulnerable.
Great to have you on here. The market has been, in a big picture way, kind of hesitating here for a little while. What's your read on what we're contending with, and whether we're refreshing this move higher or it's looking vulnerable?
Wait. Hold your horses, one flip and flapjack and moment. Hold your horses, okay? Look at this. Why don't we have a look at this? Come on, man. Like, it looks to me like the market's done very, very well, right? Like, very, very well. Is the stock market supposed to just move is the Nasdaq supposed to go up another 1,000 points every week? Like, what are we talking about here? You know what I mean? And when you talk about vulnerability, you could have said that here, right? You could have said that here. Could have said that here, right? Could have said that here. like sometimes it's just ridiculous. It's like, does the stock market need to go up 50% every single week? Like, come on, man.
I think it's definitely looking vulnerable. Even before the events in the Middle East, there are just so much risk on the horizon. And we have valuations that are very elevated, so you don't have a lot of flexibility. There's not a lot of capacity priced in to absorb all this uncertainty. So, whether it's tariffs, whether it's fiscal uncertainty, whether it's the debt ceiling, which I think is going to become a bigger issue because this bill is probably going to bump right up into the X date on the debt ceiling. You've had a lot of poor economic growth in the month of May, pointing to a downtick in growth momentum. There's just a lot of uncertainty, a lot of red flags on the horizon, and valuations just don't really give you any room for error.
Yeah, you mentioned, even before the geopolitical headlines, how do the geopolitical situation, obviously, it basically creates suspense. It creates this wide range of potential outcomes in terms of this conflict. But oil is not necessarily acting particularly alarmed. I mean, we're below Friday's highs in crude prices. What are the key things that you'd be watching to know whether this is going to snowball?
I think the biggest takeaway as far as U.S. markets are concerned is the inability of treasuries to really spike higher, despite all the geopolitical anxiety that we've seen in the last week, coupled with all this economic data that we've seen. Even today, you had a miss on retail sales, you had a miss on industrial production, you had a miss on the NHB housing survey, you have this ongoing escalation in geopolitical tensions. Treasuries rallied a little bit, but the move is not as large as I think one would have assumed. And that just speaks to some of the upward forces placing pressure on yields, including fiscal imbalances, like I mentioned. Still a lot of anxiety around the inflationary implications of tariffs. So that to me is kind of the real big, notable factor of the last few days. As far as geopolitics, obviously, oil is going to be the transmission mechanism. We need
to get that 10-year in the threes ASAP.
This becomes a broader macro problem. Like you said, we haven't seen any real supply disruptions. It's an extremely fluid situation, but we've been dealing with geopolitical uncertainty, intense uncertainty now for years. Whether it's Ukraine, whether it's the other conflicts in the Middle East, even India and Pakistan more recently, and markets have absorbed all that relatively well. And I suspect it's going to be the case again with this latest conflict in Iran.
So we have a Fed decision tomorrow. We're going to get the outlook, the dot plot. You mentioned, and this is important to note, that we are going to also get weekly jobless claims tomorrow because Thursday is a market holiday. What's your level of concern, I guess, about some of the softer labor data?
Yeah, I mean, a lot of the May data has pointed to, again, a downtick in growth momentum. So the jobless claims have been deteriorating, especially the continuing jobless claims. That's definitely a red flag. We'll have to see if that goes up further tomorrow. Just circling back quickly to the monthly report for May, the headline number on the establishment survey was decent, but there was a lot of weakness beneath the surface, especially in the household survey. So it really does suggest that there is softness in the labor economy. I definitely think that the Fed has reason to kind of pivot its outlook very modestly in a dovish direction, just given all the data that we've seen. I think the messaging for the most part tomorrow is going to be relatively status quo. They see risk to both sides of the mandate, and given that the economy they think is in a relatively decent position, they're going to kind of just sit on their hands and watch how everything unfolds. You do have the risks on the dots, the 2015 dot potentially going from 2 to 1.
So I'm just thinking, some stocks are scaring me right now. What do I mean by that? There's a stock that just crossed, a ticker that just crossed there on CNBC that I was looking at that stock and I'm like, that's scary. You know what stock it was? Apple. Big dog. Right? I saw Apple 195 right now. And I was just thinking to myself while I'm watching this, I'm thinking, we're almost at all-time highs in the Nasdaq, almost at all-time highs on the S&P 500, right? And Apple's trading 195. And I was just thinking, what if we had a major downdraft later this summer or this fall for the market? What does a stock like Apple go to? Are we talking 130? Are we talking 145? What are we talking here, right? And so there's just some stocks really reacting bad in this market. RH is another perfect example, high-end furniture company, right? Looking at that stock right now in the 180s with the market nearly at all-time highs. And it's what happens if this market actually got sold off again heavy? You looking at an RH at $90, 110, 120, right? Geez, so there's some stocks really reacting bad in this market. One of those stocks is certainly not AMD. AMD's reacting very, very well in this market. So I posted this on X. By the way, if you don't follow me on X and you want to follow me on X, go down to the description area of this video. I always have my X page linked in the description area. It said AMD is now by far my second biggest position in the public count. Counts for nearly 10% of the portfolio. Crazy part is the run is just starting, in my opinion. Only up 39,000 so far, up 390,000 eventually, right? And yeah, I do believe that's going to happen. And I do believe there's a chance that AMD eventually becomes $1 million position, assuming I don't sell any shares in this portfolio, right? I do think there's a chance it could end up becoming a $1 million plus position, right? So when it comes to exit strategy in regards to AMD, what's kind of my exit strategy here? I don't have an exit strategy for AMD because the stock price is so far from what I believe AMD is going to be priced at years from now. So a good example of that would have been Palantir back in the day. Palantir back in the day, there was no exit strategy for years to go in the future because Palantir was so cheaply priced. I was buying the stock in the 7s. So even when it went to $14, I was not interested in selling. And the same thing when it went 21 and 28 and 35. It's not told more recently that I've been selling Palantir, right? And so when it comes to AMD, the stock is so far from a price that makes me what would it take for AMD stock price to be right now to make me say, you know what? I'm going to go ahead and I'm going to sell some of my shares. And what stock price would the stock need to be today for me to cash out of my position 100% and be I'll just take that and run? Let's say I could do a private party transaction. Somebody said, I'm going to give you this for your AMD shares, but you can't buy it back for the next few years, right? For me to sell half of my AMD shares, I would need the stock over 300 right now for me to sell half right now. For me to sell my full position, I would honestly need AMD closer to $500 for me to say, you know what, take all my AMD shares. I won't buy it back for the next several years. It would need to be a way more severe price than where that stock is at right now, right? I mean, we're not even in the same ballpark right now. AMD's in the 120s right now. And for me to sell even a portion, I would need 300 plus right now, and I would need $400 to $500 range for me to say, okay, go take all my shares. I'll take my money and run, right? So that just shows like how far the stock really has to run, in my opinion, before I'm like really interested in selling shares. Right now, obviously, if the fundamentals of the company change for the worse or something, that changes things. But listen to this interview here, and I think you're going to get very, very bullish on this one. By the way, I did a full-on AMD video on the main channel, Financial Education, 3 days ago. AMD will never be the same. Talked about a lot of very important things in that video. So if you haven't got to check out that yet on the main channel, definitely check out that AMD video.
AMD's CEO and chair. Thanks for having me here.
Thanks for being here, John.
So talk to me about these systems. You got a chip sitting there next to you that's, I guess, fresh out of the oven. What is it that you're announcing here? What level of competition does that raise you to with the others out there?
Yeah, absolutely. So first of all, it's been a big day for AMD, really exciting. I love talking about our new products, you know that. So we just recently announced our MI355 chip. This is our newest AI chip, and it is fantastic. It's the best inference accelerator out there in the market. And, you know, if you look at what's happening in AI today, we're just seeing so many more use cases, John. Like, people are using AI everywhere. And so one of the most important things for our customers is to get more efficiency from their chips. So when you think about tokens per dollar, that's kind of the metric that is used. And this chip will give you 40% more tokens per dollar, which just gives you the opportunity to offer AI at a much more affordable price across the world. So yes, very exciting. We also previewed our 2026 lineup. We're on an annual cadence now of new accelerators, and we're not just doing chips, but we're doing big rack scale systems. And so all of that was part of our announcements today.
And their investors are puzzling over how the innovations will translate into share gains versus the likes of NVIDIA. So why is it beyond chips now, and why is it about racks? That was a big part of the ZT Systems acquisition. Put that into perspective with the go-to-market and the design component to satisfy the customer need.
Yeah, absolutely. So, look, we're really excited about the momentum that we're seeing in the AI market these days. If you look today, 7 out of the top 10, model builders and AI companies are using AMD products. That includes Meta, Oracle, OpenAI. Sam Altman was here with us today. Meta and Oracle were here. XAI, Tesla, to name a few. And when you think about, what they need, what they really want is the latest generation hardware that gets into the data center and then gets into serving production workloads as fast as possible. And so to do that, you require, of course we require chips, but we're also putting a significant amount of investment into the software layer to make it just super easy to use. And we're also building rack scale solutions. So we just completed our ZT acquisition. We've added 1,000 design engineers, and the whole purpose is so that we can help our customers get to the market with our AI solutions as fast as physically possible.
You've got competition with NVIDIA at the high end, certainly. And then the hyperscalers, the big cloud providers, who are also now big AI providers, AWS, Azure.
She's like, brah, if you mention NVIDIA one more freaking time, one more time.
Google, they've got their homegrown AI chip that they're trying to use as much as possible to keep their costs lower, their margins higher. How do you play to both ends of that and win? How does openness fit into your strategy?
Yeah, well, John, when you think about it, I view we're still in the very early innings of AI. And frankly, as much as we've seen a ramp up in AI, we have sort of said that the market is going to grow over 60% annually for the next number of years to over $500 billion in 2028. That's a huge market. And, in that market, what people want is the most flexible and the most programmable, architectures out there. And that's really what we're building. And,
and listen, let me put this very simple. What she just mentioned right there, that alone makes AMD a must buy. Like, you got to have AMD in your portfolio. Like, come on, man. That just in itself, we don't even have to go into the rest of it. Like, that alone, you got to have some AMD in the portfolio, man. It's just a question of how big of a position.
The point in this is, again, we believe in deep co-development with our partners. So hardware, software, systems coming together, making sure that we have the right compute for the right application. And that's what we've shown. if you look at just how much improvement, I can just give you some stats, right? If you look at the solution that we're just talking about, the MI355, it's
hold it up high.
Oh, hold it up high. Yes, I want to make sure everyone gets to see my new baby here. We're very happy that it is now out in production, but this is like 3 times the performance of just what you saw last year. So that's just how much value you're getting. And we previewed our next generation, our MI400 series, and there we're going to see like 10x, types of improvements. So that's how much we can get from the hardware and working closely with our partners. And you asked about Open. Open is the foundation of what we do at AMD. I'm a real...
Okay, before we go into Open, because these are all important points she's making here, but she specifically mentions around performance, right? And this is a 3x improvement versus what you saw last year, and then MI400, we're talking like a 10x improvement, right? The important thing, this is why these companies are basically, and when I say these companies, I'm talking about all these big companies that want to compete in anything AI related. They're basically forced to continue to spend aggressively on these chips. Not only this year, but next year and years to go in the future. Because if you don't, you're going to fall behind. And you may say, well, why not just wait till the chips are, why buy a chip this year and, use that chip when next year they're going to have the MI400s out and those are going to be 10x more powerful? Well, many reasons. One reason is, how many MI400s are you going to be able to get your hands on next year? You realize everybody's going to want that chip, right? Everybody's going to want that chip. So if anything, they'll be supply constrained in regards to AMD, in regards to MI400, right? Because everybody's going to want that chip. Secondly, you don't have time to wait. You need the most powerful chip now. Not next year, not the year after. You need the most powerful chip now. And you know what you need next year? The most powerful chip that's available at that time next year and the year after, right? And obviously you got to weigh in cost as well, like what's going to help you operate as efficiently as possible and keep yourselves in budget. But there's many reasons why you need the most powerful chips AMD has today, but you also need the most powerful they have next year, and you also need the most powerful they have in 2027 and the most powerful they have in 2028. You can't fall behind. You fall behind in this game, you lose. You lose. And do you want to lose? No. You lose in this game, you're going to miss out on, potentially tens of billions, if not hundreds of billions, if not $1 trillion type opportunities.
You asked about Open. Open is the foundation of what we do at AMD. I'm a real believer in the fact that an open ecosystem is how you get the best innovation into the market. So we have, thousands of developers here today. They're playing with our hardware, they're learning our software, and we want all of them developing on our stuff so that we get the benefit of all of that innovation and they get the benefit of bringing their best ideas in.
And that's important. That's important because when we're talking about the software side, AMD wants everybody to use their software, right? Whereas NVIDIA's going a little bit of a different route. They're going a little bit more walled garden. Some people would say NVIDIA's approach is much more similar to like an iOS type approach, right? And we'll see what wins. The thing you got to understand, both can win. A lot of people think this is a zero-sum game. Either AMD wins or NVIDIA wins and that's it. No, doesn't work like that. Guess what happened in mobile phones? iOS won. But you know who else won? Android won. They both won in the end, right? Like Android, insanely successful. And they had way more market share and they have way more market share, right? Than iOS. But is Apple hurting for money? No, of course. They're extremely successful as well. So both won. Did Android end up with massively more market share? Sure. But Apple actually became an even more valuable company. So, the important thing to understand is like there can be multiple winners. It doesn't have to be just one company that wins, right? Both strategies could end up winning. And who knows, maybe AMD becomes way more popular over time. It might be. That doesn't mean necessarily there'll be a bigger market capitalization than NVIDIA. Maybe NVIDIA ends up long-term being a $5 or $10 trillion market cap. Like maybe NVIDIA becomes a $10 trillion market cap, let's say, right? Maybe AMD becomes a $2 trillion market cap or $5 trillion market cap. It's like, wow, they're still so far from NVIDIA. But would that have been a win? Of course, that would have been a huge win. Monumental, right? So that's an important thing to understand about these markets, right? And once again, if you want to check out a video, I spoke about AMD pretty extensively, and that was a AMD only focused video. Check out the main channel, Financial Education, and check that baby out, okay? Additionally, pin comment down there here today if you're looking to apply to join private stock group, private wealth group, get access to my private Discord chat, access to 1000xstocks.com. If you want access to all that, pinned comment down there here today. Click on that, fill out a form, see if we can get you access to that maybe a little later on this week or next week. You get access to all of my premium courses, Become a Master Stock Market Millionaire, Playbook, Stock Options Mastery, Dividend Investing Mastery, my courses on even hedging, right, and those strategies. Is pretty awesome. It's pretty awesome. Take yourself up to a much higher level and learn how to build sustainably. Much love and have a great day.